Hey, what's up, my friend? So, welcome back to this month's price action analysis. So, this is where I identify trading opportunities in the markets and share with you my thought process, what I'm looking at, what I'm looking to trade, where am I buying, why am I selling, and stuff like that. So, basically, to get an insight right into how I look at the markets and how I trade it. All right, so this is all based on a real-time chart. It's not going to be cherry-picked charts like some of my other trading videos. This is a trading in the now, right? I could be right, I could be wrong, and I'm here to just share it all with you in this video. So if that is something that you would like, right, then today's video is for you. So first thing first, right? Let's have a look at pound New Zealand. So from the looks of this chart, right, to traders looking at this chart, you might be looking to sell, right? Hey Rayner, I know what you're thinking, Rayner. You are looking to sell at previous resistance that could become support. Now, I don't blame you, because if you were to just look at this chart, right, that might be your thought process, all right? But as you know, when I trade, right, I always use multiple time frame analysis. I like to understand where I am in the big picture. So if you just go up one time frame higher, like the weekly, you would realize that this market is actually still in a long-term uptrend. It is forming a series of higher highs and higher lows. Higher lows, lows, higher low, higher low. And on top of it, it had a bounce of this upward trend line and this area of support over here. So this to me is a key area of value on the chart. Why is that? Because we have this confluence of this upward trend line as well as this area of support over here, which will be more visible as you see right on the daily time frame over here, right? This area of support. Okay, this area of support. So now the question is, where do we enter, right? That's always the question, right? Where do we enter? So now that we understand, right, that the higher time frame is in an uptrend, it has just had a bounce of the area of value, right? Now is where we are looking for an entry trigger to get long. So now ask yourself, right, do you want to be buying at this price point? So over here, do you want to be buying here? If you're going to do that, right, then where is the next logical level to set your stop loss? If you ask me, right, the nearest level to set your stops has to be below this swing low over here, which is pretty darn far away from here all the way down to here, very far. So that's not what I'm looking for. That's not what I want to do. So what I'll do instead is that I'll go down to a lower time frame, like the 8-hour time frame, and look for bullish trend continuation move, right, to signal to me that this market still wants to go up higher. So what I'll do is I just simply pull out the 20 MA. Okay, you can see that the price is still trading above the 20 MA. I want to see a pullback. Okay, possibly towards the 20 MA, forming something like a bull flag pattern. So at this point, the 20 MA would have caught up with the lows of the flag pattern. So when that happens, right now we have this pullback. So when the price, let's say it goes up higher and breaks above this highs, I will look to buy a buy stop order above this highs, and my stop loss, right, can just go below the low of the flag pattern. Let's say the low of the flag pattern is somewhere about here, can go 1 ATR below it, somewhere about here. So now I have a much more logical place to set my stop loss. I can actually reference the low of the flag pattern, right, to set my stop loss, compared to earlier, referencing from this low over here. So this is where I need the market to give it time, right, to unfold the price action structure, right, that I can use it to reference to set my stop loss. Now, some of you also might be thinking, but Rayner, aren't you concerned that you might be buying into this area of previous resistance that could become support? And yes, that's a valid thought, right? But here's the thing, right? My thought process is this, right? Is that I am trading with the higher time frame trend, which, as you've seen earlier on the weekly time frame, I'm trading in line with the higher time frame trend. And if this trend were to continue up higher, then what is likely to happen is that whatever swing highs, right, that are in my way, like this swing high, chances are is that they will break, meaning the price will break out of it, right? So assuming that my hypothesis, my assumption is correct, right, I would expect these levels, or rather I would expect the price, right, to break out of this level. So this is why I am willing, right, to just buy in front of this this resistance over here, right, expecting that it would break, since I'm actually trading in the direction of the long-term trend. Okay, I hope that makes sense. Moving on, next one. Dollar against the Sing, right, currency that's near to home. So again, big picture analysis. Let's look at the daily time frame. You can see that over here, this market, we have broke right below this key area of support. Let me just zoom out even further. You can see this area here. Okay, so previously we had resistance, previous resistance becomes support, tested once, twice, and now we have a breakdown. So what is my plan, right? So again, simple. I trade along the path of least resistance. Price has broke below key area of support. Price is making a series of lower highs and lower lows. Lower highs, lower high, lower high, lower high, lower low, lower low, lower low, lower low. So I will be looking to sell. Okay, so now the question is, where do you sell? Okay, so this is where we establish our area of value. So a couple of ways you can do it. First thing first, you can go up to the 8-hour time frame, right, and look for selling opportunities at this area, right, where previous resistance could become support. Sorry, previous support could become resistance over here. This will be my first area of value to look for selling opportunities. What to look for is very simple: a retest, price to hit up higher, right, and then make a sudden reversal, right, closing near the lows of this candle. So it comes up into this area of value and then make a sudden reversal down lower, closing near the lows of the candle. What I'll do is then I'll go short on the next candle open. Stop loss, right, can just go 1 ATR above this highs. Right, so with the expectations that this market could continue down lower, as we've seen, right, that the overall trend is towards the downside. That's the first thing I'll be looking for. Alternatively, on a daily time frame, right, if you pull out the 20 MA, you can see that this market, another option is that it could form a a bear flag pattern, right, like this. Okay, price hit up higher, bear flag pattern. 20 MA hits down lower. So if the price then breaks below this low, I could look to sell the break of this swing low, okay, in anticipation of lower prices to come. So that is second option, right? So a couple of ways you could look to short this market for the dollar against the Sing. And by the way, right, whatever I'm sharing over here in this video, it's solely for educational purposes only. So whether you make money, whether you lose money, it's your responsibility. I believe you can agree with that, right? So don't come after me, you know, if you lose money, Rayner, I follow your trade recommendation and I lost money. Come on, man, you're a grown up, you're an adult. Take responsibility, right? So likewise, right, even if you make a profit, I don't expect you to, you know, hand me $50 down to my account because you make a profit. Okay? So moving on. Next one, Bitcoin, right? So Bitcoin, again, right, let's look at it from a big picture analysis, right? Let's look at, let's say, the weekly time frame. We can use either the daily or the weekly time frame for big picture analysis. That's for me, at least. So you can see that Bitcoin, it has broke out of this area of resistance, right? So prior to the breakout, we have this volatility contraction pattern over here. And to be honest, right, I was actually expecting a breakdown. Let me explain why. But in this case, I am wrong. So as I mentioned, right, I do get wrong from time to time, right? So you can see that why I was expecting a breakdown is because I noticed a series of lower highs coming into this area of support. So series of lower highs into an area of support. And as for those of you who have been following me, right, you know, when we see a descending triangle at resistance, right, that's usually a sign of weakness, right, telling you that, you know, the buyers have difficulty pushing up the price higher. That's why you have this lower high, lower high, lower high. But in this case, right, clearly I'm proven wrong. The market broke out higher, even up above resistance. Okay, so my analysis, or rather what I expect the market to do, didn't happen, right? So now, as a trader, you got to be fluid. You have to adjust, right, according to market conditions. And right now, at this point in time, the market has spoken, right? It wants to hit higher. Price has broke above this area of resistance. So I am bullish right now on Bitcoin. And how am I going to trade this? So again, right, what you can look for is for a trading setup, let's say on the 4-hour time frame or the 8-hour time frame, either or. Okay, you can look for a retest, right? A retest of this previous resistance that could become support. The price could swing down lower, do a false break, close bullishly back above support, and then go long on the next candle open. Stop loss, can you just go 1 ATR below these lows? Possible targets could be at this swing high and this swing high over here. So can you see how this top process flow? First and foremost, we get our bias on the higher time frame. Second thing we look for is for the price to come to an area of value, right, where we can trade from. The third thing we look is for an entry trigger that, you know, stops and exits, right, if the market moves in your favor. So pretty simple stuff. Okay. And just one last thing, right? Let's talk about gold. And the reason why I want to talk about gold is that, you know, I have seen, you know, comments on Twitter, you know, where people's barber are looking to buy gold, recommending people to buy gold, or even say stuff like, you know, if you're not holding gold, right, you are not doing a justification to your own financial well-being, yada yada. So clearly, a lot of bullish sentiments out there for commodities, gold and silver. But as a trader, right, what we're looking for again, right, is valid trading setups, right, that we can take advantage of. And if you look at this chart right now, right, the daily or even the weekly, you can see that this market has gone parabolic. It's overextended, and at this point in time, you don't want to be buying gold, at least not on the weekly time frame. Okay, or rather, let's talk about the daily time frame, since that's a time frame that's more applicable to many of you, right? Trade off the daily time frame, because let's say if you were to buy gold right now at this price point, where is the logical place to set your stop loss? If you ask me, the nearest price structure is possibly below this swing low or this previous resistance that could act as support, these two levels. So these two levels are where I would say it's logical, right, to set your stop loss. But the problem with it is that the size of your stop loss will be pretty darn large. Like, looking at maybe $300, $400 on gold. So what's the plan now? So what you can do is, again, use the 20 MA as a guide, because in this market you can see that gold, right, seems to be respecting the 20 MA. Tested once, twice, falls, breakdown over here, and then it has been constantly above the 20 MA. So what I'm looking for now is, again, right, for the 20 MA to catch up with the price, so going up higher, right? And at the same time, I want gold to take a breather. I don't want it to continue moving up higher, because it will get even more overextended. So I want it to take a breather, take a pause, to breathe in, right? Breathe in to store potential energy, right, for the next move higher, maybe. Okay, so how would that look like on the chart? So what I'm looking for is for gold to consolidate, right? Stop moving, going higher, right? Consolidate, give it time to rest. So I want gold to consolidate for the next, 5 to 10 candles, or maybe the next few candles it starts to consolidate. So at this point right now, I have something that looks like a blue flag pattern, again, a trend continuation pattern. And ideally, right, on the pullback, on the consolidation, I want the range of the candles to be small, like this, right? Small, nice, cute range candles, small range candles. I don't want the pullback, right, to be so large, like this type of large, big bullish candles, right? Because if you imagine, if the pullback is big and bearish like this size, you can see that it's going to be bum, right? Going to be bearish, and I don't want to be, buying the breakout of this highs if the pullback here is so steep. I have other plan of action, but not, buying the breakout of the flag pattern. Okay, so if I'm trading this bull flag pattern, I want it to be nice and small, the pullback, the range of the pullback. Then if the 20 MA catch up with the price, if the price were to break above this highs, now I can look to get long, stop loss, and now I can reference, right, the low of this flag pattern, right, to set my stop loss. And one thing to point out is that, understand, right, that right now at this stage of this gold market, if you look at the weekly time frame, it is overextended. So if I do get an entry trigger to go long, I'm not going to, stay too long in the trade, right, and try to get like $1,000 price point move on gold. No, I will trail my stop loss tightly. So this means, right, let's say if it consolidates, okay, then the price breaks out, all right. If it breaks out and I buy, I will trail my stop loss, right, using the previous day low. So when the price breaks and closes below the previous day low, I'm out of this gold trade. So I'm just looking to capture that burst of momentum, right? If it wanes, if it starts to show signs of tiredness, weakness, I'm out of the trade. Because as you've seen, right, this market right now, if you just pull out the 20 MA on a weekly time frame, it is way overextended, way above, right, the 20 MA, which is over here, this area of value. Okay, so it's quite overextended at this point in time. I don't want to stay in the trade too long, right? Because when the pullback comes, right, it could easily retrace, $300 or more. All right, back at least to this 20 MA over here. So that's my plan for gold. All right. Now, if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Traders Edge, right? This is my premium membership, right, where you will get such market analysis every single week, right? I usually publish these type of videos on a weekend to share with you my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right? Because as a Pro Traders Edge member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have, things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly, add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you've seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can, shorten your learning curve and quickly, level up your trading. So you can see that, every week we publish a new video on the markets. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog posts and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you, level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have, trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can, download this checklist to review it, right? To make sure that, you're on the right side, on the right page, right? And not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to, help you with your own trading, like, the MACD, MT4, there's some issue with it. We have fixed it over here. We have the Donchen channel, news reporter that alerts to you, potential, important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy, because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right? Even if you have no trading experience. So this is what you'll get, right, as a Pro Traders Edge member, right? New content are updated regularly for the Backtest Research Lab, weekly trade alerts, premium strategy guides, and much more, right? So I'll put the link below so you can check out Pro Traders Edge. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.